Strawberry, this video will be very short. Let's just assume that market is in an uptrend. So the market goes up like this, comes down and didn't break this one. Then goes up and break this top here. Okay, comes down again. It didn't break this one, but it can even touch at the same point, the same line with it, and later rise up and break this one. It shows that this market is obviously in an uptrend. Okay, but if this market actually wants to break, change the direction, if the market structure actually wants to break, it comes down again, goes up, keeps going up like that. But the market wants to change from uptrend to downtrend, it will have to break market structure by breaking this point and not breaking this last high. Okay, the market actually comes down, break the last higher low, then goes up and didn't break the last higher high, then later comes down and break this one. It's obvious that this market has actually changed trend from uptrend to downtrend. So this top here will now be our lower high, and this next one will be our lower low. I hope you understand now. So the market keeps going like this. Did you get that? From downtrend to uptrend, the market actually wants to change. Forget about that lower high, lower low. After getting it, you can be adding it yourself. So let's say the market comes down. This way started coming down. The market goes up, didn't break this higher low. Then comes down and break this lower low again. Goes up, didn't break this one, this place. But it can touch it. If the market touches, that doesn't mean it has changed the direction. As long as it doesn't break it, it's still in downtrend. Then comes down and break this lower low again. Keeps going. It is obviously in a downtrend. But if this market actually wants to change, trend, then the market will have to go up, break this higher low, and won't break this lower low. So it can form anyhow. It can go up without breaking here first, then comes down without breaking here too, then later goes up and later break this point. Once the market actually break this point here, the last one, and it was unable to break this last one over here, then the market has actually changed. Then the market comes like this, comes like this, comes like this, comes like this, which means from downtrend to uptrend. Did you get that? The market is in an uptrend. This is the best way to trade it. Let's say the market goes up, comes down, break this, goes up, comes down, break this, goes up. As it goes up like this, makes an impulsive move. It is best not to trade now. Wait for the time market started retracing. As the market started retracing, that's when you'll be looking for buy opportunity. Where will this market stop for it to buy? As it started coming down like this, some people will actually be entering buy with small lot size till it rises up and break this up here. But there are ways like order block, price action pattern, candle pattern that people actually use, like bullish Igovi and co, to know when the market is actually about to rise. All people will just do is they will mark the last low and the last high. Okay, then they will be looking for entry within this point from here to here. That's where they will be looking for entry. But once market actually rises up and break this top over here, never enter the market again, because you don't know when the market will actually start retracing. Markets might start retracing from here again, which will be in big loss. So whenever markets break this high over here, don't trade. Wait for the next retracement to start happening before you look for buy opportunity. That's one way. To understand the previous explanation, let me tell you how they actually trade uptrend and downtrend. Let's say the market goes up, comes down. This is the higher high, this is the higher low. It goes up again, form another higher high, and comes down, form another higher low. So the best time for you to trade is within this range from here to here. It's the best time for you to enter the market, so you'll be able to write impulsive move. In an uptrend, you only trade impulsive move. Don't even dare to trade retracement. If you are selling in an uptrend, you are doing yourself. So we only trade impulsive move. So the best time for you to trade impulsive move should be within this range from here to here. So you'll be able to catch this as it breaks the last low higher high. So let's say the market actually is here, comes down. As the market actually started coming down like this, you know that it has already formed higher high here. So it started coming down. That's when you'll be looking for buying opportunities. Buying opportunities. So you'll be able to ride it up till this break here. So from here to here is where you'll be looking for buying opportunity. There are some blocks we actually look for, other blocks, some candlestick pattern like bullish Govin, hammer or something like that, dodgy candles to know maybe the market is about to reverse and started going up, or to know maybe the market is about to start an impulsive move. There are other ways too, but that's the first way. We'll talk about other block later. Let's take it small gradual. You say you don't understand what time frame is. We'll talk about that.